Okay, let's unpack this. Today, we're stepping into the world of money services businesses,
Hmm.
MSBs. Now, you might have used an MSB without even giving it a second thought, maybe sent money to family overseas,
Mm.
or exchanged currency for a trip, or cashed a check somewhere that wasn't your main bank. On the surface, these seem like pretty simple transactions, right?
Yeah, pretty routine for a lot of people.
But behind them lies this, well, complex, heavily regulated sector. It's absolutely essential to the global financial system, yet uniquely targeted by financial criminals. To guide our deep dive into this kind of intricate space, we're drawing from some excellent source material, specifically excerpts from an article called Money Services Business, MSB FinCrime Intelligence.
And our mission here is to really dig into that source material, to understand this inherent tension, what MSBs are, how vital they are, but also why their fundamental services make them such a high-risk area for, financial crime. We'll explore the definitions, the surprising variety of businesses that fall under the MSB umbrella, the rigorous rules they absolutely must follow, the specific ways criminals try to exploit them, and what regulators and businesses are doing to try and, well, stay one step ahead.
Right, the duality essential access versus significant risk. This is like the core challenge here.
hmm
So kicking off, how does our source material actually define an MSB, and what's the key thing we need to grasp from the get-go?
Well, the definition itself is pretty straightforward. An MSB is a financial entity, or sometimes even just an individual, offering specific financial services. Think of the examples the text gives: handling money transfers, cashing checks, or exchanging currency. The crucial point, though, and the reason we're having this deep dive, is that because these activities can be easily exploited. Well, MSBs are placed squarely under anti-money laundering AML regulations. They have to register with regulators like FinCEN in the US is the example given. They have to implement comprehensive AML programs, and they're under, constant scrutiny. They're not just doing transactions, they're kind of gatekeepers.
Okay, so it's less about the type of shop and more about the financial activity they're doing.
Exactly, spot on.
And the source highlights that this category is much broader than many people might assume. What kind of variety are we talking about?
Oh, it really spans the spectrum. You could have a small neighborhood check casher or, a massive global remittance company, or even a cutting-edge digital platform. The text breaks down the key categories, and it shows just how widespread these services really are. First, you've got money transmitters. These are absolutely vital for cross-border payments, especially remittances, people sending money home. And this category often includes digital wallets too now.
Right, like the apps many people use.
Exactly. Then there are currency dealers or exchangers, your classic foreign exchange bureaus, whether they're physical storefronts or online. You also have check cashers. They provide liquidity, cashing checks, or money orders for a fee. This is really critical for individuals who might not have traditional bank accounts.
The unbanked or underbanked populations.
Precisely. The text also mentions issuers and sellers of traveler's checks or money orders. These are basically substitutes for cash, still relevant in certain situations. And finally, prepaid access providers. So this includes businesses offering prepaid cards, other stored value products.
Wow. That list alone really shows the incredible reach and the convenience of MSBs. They're providing financial services in ways traditional banks might not, or maybe can't. And the source adds that interesting point about crypto exchanges and VASPs potentially being classified here, depending on the jurisdiction.
Exactly. It really highlights how regulators are looking at new technologies and basically asking, okay, does this service function like a traditional money service? If the answer is yes, then it probably needs to meet similar, stringent regulatory obligations to prevent misuse. It just shows the continuous challenge of applying established rules to financial tech that's evolving so rapidly.
Okay, so we see the vital role, the diversity, but the source makes it abundantly clear that these services are seen as inherently high risk for financial crime. What is it specifically about handling cash and moving money, maybe across borders, that makes them so vulnerable compared to, say, a standard bank account?
Well, the core vulnerability, as the material points out, really lies in the nature of the transactions themselves. Cash transactions, well, they can be harder to trace back to a specific source, right?
Mm-hmm. Less of a paper trail.
Exactly. And cross-border movements can exploit differences in regulatory oversight between countries, or just simply move money outside the immediate sight of one country's authorities. Criminals are always looking for ways to move money quickly, anonymously if possible. And the speed and convenience offered by many MSBs, particularly those dealing in cash or operating across borders, that can be precisely what they need to move illicit funds or, finance illegal activities.
That makes sense. If I'm a criminal, I probably don't want a lengthy, heavily documented bank transfer. I want fast, hard-to-trace movement.
Hmm.
So given that inherent risk, what kind of strict regulatory framework is actually placed on MSPs to counter it? What do they have to do?
The framework is quite comprehensive. As the source details, beyond the mandatory registration we mentioned earlier, MSBs must implement a robust AML compliance program. And this isn't just a checklist. It requires real internal policies, controls, dedicated compliance staff. They also have strict customer due diligence CDD and know your customer KYC obligations.
Right, figuring out who your customer actually is.
Precisely. Verifying identities, assessing the potential risk that customer poses.
Hmm.
And this can be particularly tricky with high volume, maybe lower value transactions, or in places where identity documents aren't as standardized. They're required to file suspicious activity reports, SARS flagging potentially illicit transactions, and they have to maintain meticulous records, especially for those cross-border movements.
It's lots of record keeping.
Oh, absolutely. And it's an ongoing commitment, too. Regular employee training is mandatory, and their compliance programs have to undergo independent audits.
That sounds like a significant burden, especially maybe for smaller operators or those, as you mentioned, with huge networks of agents. And the source doesn't really pull punches on what happens if you fail to meet these standards, does it?
Absolutely not. The material highlights that the consequences are severe. We're talking hefty regulatory fines, losing your operating license altogether, or even, in some cases, criminal prosecution. It really underscores how seriously regulators view the responsibility of MSBs in the fight against financial crime.
Okay, so let's get specific then.
Sure.
Beyond just general money laundering, what are the particularly prevalent financial crime risks that criminals use to exploit these services, according to the text?
Yeah, the source lists several key methods. Money laundering is obviously the big one. Using MSBs specifically to maybe bypass the stricter scrutiny they might face at traditional banks.
Hmm.
Terrorist financing is another significant vulnerability mentioned. The speed and, again, the cross-border nature of some services make them attractive for moving smaller sums quickly, which is often how terrorist activities get funded.
Smaller amounts, but maybe more frequently.
Exactly. Then we see smurfing and structuring. That's basically breaking down large amounts of dirty money into smaller transactions, often just below the reporting thresholds, trying to fly under the radar.
Ah, right. To avoid triggering those automatic reports.
Precisely. It's a classic technique, but it can be really difficult to detect in high-volume environments like some MSBs operate in. The use of third-party agents also presents a unique challenge. Many large MSBs operate through networks of thousands of agents, could be small businesses themselves, ensuring consistent compliance and actually monitoring behavior across that whole dispersed network is inherently complex.
I can see that. A huge challenge.
Definitely. And then there are various fraud schemes. MSBs can become unwitting conduits for funds related to scams. Think like fake lottery winnings requiring an upfront transfer fee, or schemes using stolen or even synthetic identities to move money around.
That agent network challenge sounds particularly tough. You have the main company trying to enforce rules across potentially a global web of independent operators. How do you manage that?
It's a major focus for regulators precisely because of that complexity. And the source notes these risks are often amplified in regions maybe with less developed regulatory infrastructures or where informal money systems are already prevalent. It really highlights the global, interconnected nature of this issue.
So with all these challenges, how is the oversight evolving? The source mentions bodies like the FATF, the Financial Action Task Force, and national regulators are enhancing supervision. What does that look like?
Yeah, there's definitely a clear push for more effective oversight. Some key measures include licensing or registration requirements that extend not just to the central MSB institution, but also down to its individual agents, trying to get better visibility into those distributed networks.
Oh, okay. So regulating the agents too, not just the head office.
That's the idea. Regulators are also moving more towards risk-based supervision, so focusing their resources where the potential for illicit activity seems highest, looking at specific high-risk services, customer profiles, or geographic corridors. Cross-border cooperation between regulatory bodies and law enforcement is also becoming increasingly vital. You have to follow the money even when it crosses borders.
Makes sense.
And as we touched on earlier, there's growing scrutiny on digital MSBs and fintech platforms, especially those dealing with crypto assets. Really trying to ensure these newer avenues aren't creating new blind spots for financial crime.
It sounds like a constant game of catch-up almost. where regulation has to adapt as quickly as the technology and the criminal methods change.
It absolutely requires constant vigilance, and that's a point the source emphasizes. MSBs can't just implement static rules and think they're done. They need to be agile, adapt their controls as the landscape shifts.
So for an MSB trying to navigate this high-risk, highly regulated environment, what does the source identify as the key best practices? How do they stay compliant and secure?
Well, the material outlines some really practical steps that go beyond just ticking the minimum requirement boxes. First, they should conduct ongoing risk assessments. Understanding that risk isn't a one-time evaluation, it needs continuous monitoring across their customer base, the services they offer, the geographies they operate in.
So it's dynamic.
Very dynamic. Investing in automated transaction monitoring tools is also crucial. This allows them to look for suspicious patterns or anomalies in real time or near real time, rather than just reviewing transactions after the fact. Maintaining clear, auditable records, especially for international transfers, is just non-negotiable. It's essential for demonstrating compliance and helping investigations if needed.
And what about those agents?
Right. Implementing robust agent oversight programs is essential, given the unique risks we talked about. This means effective training, monitoring, and auditing of their agents. It's critical. And crucially, regularly updating training and conducting scenario-based testing for staff. This ensures everyone, from the head office down to the frontline agent, understands the risks and knows how to identify and report suspicious activity properly.
That comprehensive approach, especially the ongoing training and that agent oversight piece, seems absolutely critical for it to actually work.
It truly is. And the overarching best practice, the thing that ties it all together that the source highlights, is fostering a strong culture of compliance. It needs to permeate the entire organization.
It can't just be a department somewhere.
No, exactly.
Yeah.
It needs to be ingrained in how everyone does their job, not just seen as some regulatory burden they have to deal with.
Which brings us right back to that core tension we started with. MSBs are undeniably vital, essential for financial inclusion, facilitating necessary transactions globally.
They absolutely are. They provide access to financial services for populations or needs that aren't always served well by traditional banking, making global remittances possible, facilitating informal economies, providing sheer convenience sometimes.
But that vital role comes packaged with this inherent vulnerability to financial crime, demanding these really rigorous standards.
Right. As the source concludes, operating safely in this space requires a really well-designed AML program that's actively managed. It needs proactive monitoring of transactions, of agent activity, and consistent, strong engagement with regulators. That's basically how they maintain their license to operate and, importantly, contribute to the overall health and integrity of the global financial ecosystem.
It really is a complex balancing act, isn't it? Enabling these essential financial flows while trying desperately to prevent abuse. So, considering how crucial these services are, particularly for things like remittances and just basic financial access for millions,
Yeah.
but also the scale of the risks they face, especially with those vast agent networks and the constant rise of new digital platforms.
What questions does this deep dive raise for you about how we can really ensure the integrity of global money flows while still keeping these vital services accessible and hopefully affordable for the millions who rely on them every day?
Yeah, it really makes you consider that challenge of balancing innovation and security and the constant need for vigilance, really, from both regulators and the businesses themselves to protect the financial system without, shutting down essential access. The source leaves us thinking about that ongoing dynamic. It's clearly not a problem to be solved just once, but an environment that demands continuous adaptation and diligence from everyone involved.